Based on the historical data and forecast, Bitcoin demonstrates an overall upward trend, consistently testing the 65,000 resistance level. The RSI fluctuates, but generally remains within a range, suggesting neither extreme overbought nor oversold conditions. The Bollinger Bands indicate periods of volatility, but the forecast price consistently stays above the center band, reinforcing the bullish outlook. Therefore, I recommend a long position strategy. We will enter a long position at $64,600, anticipating a continuation of the upward trend. A stop loss will be set at $64,000 to mitigate potential losses if the price reverses. The initial target price will be $65,500, aligning with the forecast and upper Bollinger Band levels. To refine the strategy, we can incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we can consider entering a long position at $57,600 with a stop loss at $57,000 and a target price of $60,000. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we can consider exiting the existing position or shorting the asset. Considering the combined signals, the primary strategy remains a long position at $64,600 with a stop loss at $64,000 and a target price of $65,500, adjusted to $65,000 if the RSI reaches 80. This portfolio combines the trend-following approach with RSI-based tactical adjustments for enhanced risk-reward management. Based on the historical data and forecast, Ethereum exhibits a generally upward trend, particularly noticeable in the recent days with closing prices reaching $1,920. The RSI values have been fluctuating but mostly above 50, indicating bullish momentum. The Bollinger Bands show that the price has been approaching the upper band, suggesting potential for further upward movement. Combining these indicators, I recommend a long position strategy. We will enter a long position at $1,850. Given the support level at $1,790, we will set a stop loss at $1,790 to mitigate potential losses. The resistance level is $2,110, so we will target a price of $1,970, aligning with the forecast for July 22, 2026. To optimize returns, I suggest a portfolio strategy combining RSI, Bollinger Bands, and support/resistance levels. The RSI is above 50, supporting a bullish stance. The price is near the upper Bollinger Band, signaling a potential pullback or continuation of the uptrend. We will use the forecast price of $1,970 as our primary target. If the price reaches $1,970, we will take partial profits. If the price breaks through the upper Bollinger Band, we will move the stop loss to the center of the Bollinger Band, $1,850, to lock in profits and protect against a potential reversal. This dynamic approach will allow us to capitalize on the upward trend while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend, fluctuating between support at $578 and resistance at $582. The RSI indicator has been hovering around the 40 to 52 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increased volatility. Given the current RSI of 44.0 on July 15, 2026, and the forecast for July 16, 2026, at $568, I recommend a long position. The entry price should be $568 plus $1, with a stop loss set at $567 to limit potential losses. A target price of $574 plus $1 can be set to capture a reasonable profit. To refine this strategy, I will incorporate the Bollinger Bands. If the price touches the lower band, it could signal a potential buying opportunity. Considering the forecast for July 16, 2026, and the recent price action, a conservative approach is warranted. Therefore, the final portfolio will be a long position with an entry price of $568 plus $1, a stop loss at $567, and a target price of $574 plus $1. This strategy balances the potential for gains with risk management, aligning with a high returns investment approach. Based on the historical data and forecast, Solana shows a declining trend with recent price fluctuations. The RSI consistently dips below 70, indicating a lack of strong overbought momentum. The forecast for the next week suggests a slight upward movement, but within a narrow range. Considering the support price of $73.6 and the recent price action, I propose a moderately bullish strategy. We will enter a long position when the price touches the support level of $73.6. The stop loss will be set at $72.6, just below the support, to mitigate potential losses if the price breaks down further. Our initial target price will be $78.5, aiming to capture a reasonable profit based on the forecast and resistance levels. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band around $70.2, it signals an oversold condition, reinforcing the buy signal at $73.6. If the price reaches the upper band, around $84.5, we will consider taking partial profits and moving the stop loss to break even. This adaptive approach, combining RSI and Bollinger Bands with support and resistance levels, aims to maximize returns while managing risk effectively. The final target price will be $78.4, and the strategy will be re-evaluated weekly based on updated data and market conditions. Based on the historical data and forecast, TRON shows a slight upward trend with price fluctuating between a support of $0.324 and a resistance of $0.332. The RSI has been oscillating between 40 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been relatively stable, with the price generally trading within the bands. The forecast for the next week suggests a sideways movement, hovering around $0.326. Considering these factors, a moderately bullish strategy is recommended. I propose a strategy incorporating all three indicators. First, we will wait for the RSI to fall below 30, indicating an oversold condition. When the RSI reaches 28, we will enter a long position at $0.324. A stop-loss order will be placed just below the support level at $0.318 to limit potential losses. The target price will be set at the resistance level of $0.332, aiming for a profit of 8 cents per TRON. If the price touches the upper Bollinger Band, we will consider taking partial profits at $0.328, securing some gains while allowing the remaining position to run. This strategy balances risk and reward, capitalizing on the slight upward trend while incorporating risk management techniques. Based on the historical data and forecast, Dogecoin shows a slight upward trend despite recent volatility. The RSI consistently hovers around 30 to 40, indicating oversold conditions. The Bollinger Bands suggest that the price is currently near the lower band, implying a potential bounce. Combining these signals, I recommend a long position with an entry price of $0.0723 plus $0.01 is equal to $0.0823. A stop loss should be placed just below the support level at $0.0719 plus $0.01 is equal to $0.0819 to limit potential losses. The initial target price is set at the center of the Bollinger Bands, which is $0.0743 plus $0.01 is equal to $0.0843. To optimize returns, we will implement a dynamic trailing stop loss. Once the price reaches $0.0843, adjust the stop loss to $0.0743. If the price continues to rise, further increase the stop loss, maintaining a buffer of $0.01 below the current price. If the forecast data shows a consistent upward movement, consider adjusting the target price to the upper band of $0.078 plus $0.01 is equal to $0.088. This strategy combines RSI oversold signals, Bollinger Band support, and a dynamic trailing stop loss to maximize potential profits while minimizing risk. Based on the historical data and forecast, Zcash shows a clear upward trend. The price has consistently tested the support level of $497 and has broken through the resistance level of $624. The RSI indicates that the asset has been fluctuating between oversold and overbought levels, currently trending towards the overbought zone. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. given the forecast prices, which predict a continued upward trajectory, reaching $596 by July 22, 2026, a bullish strategy is warranted. Therefore, I recommend a long position with an entry price of $532. The stop loss should be set just below the support level at $500 to mitigate potential downside risk. The initial target price is set at $589, aligning with the forecast for July 21, 2026. If the price reaches this target, we can consider moving the stop loss to break even at $532 and setting a second target price at $596, based on the final forecast price for July 22, 2026. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Stellar shows a downtrend with volatility. The RSI consistently hovers around the 40 to 60 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a slight bounce. The support price is consistently at $0.181, and the resistance is at $0.207. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $0.181. The stop loss will be set just below the support at $0.178 to protect against further downside risk. The initial target price will be the resistance level of $0.207, offering a substantial gain. To refine the strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at $0.181. The stop loss remains at $0.178. If the RSI rises above 70, indicating an overbought condition, we will take profits at $0.207. If the price reaches the resistance level, we can consider setting a trailing stop loss to lock in profits and potentially capture further upside. This portfolio combines technical indicators and price action to maximize returns while managing risk effectively, aiming for a high return potential with defined entry, stop loss, and target levels. Based on the historical data and forecast, Chainlink shows an overall upward trend with increasing momentum. The RSI consistently fluctuates above 40, indicating bullish sentiment, and the forecast prices predict continued gains. The Bollinger Bands suggest that the price is approaching the upper band, indicating a potential breakout. We will implement a combined strategy incorporating RSI and Bollinger Bands. The entry price will be $8.27. The stop loss will be set at $8.33, just above the support level, to mitigate potential downside risk. The initial target price will be $8.85, aligning with the forecast price for July 22, 2026. To maximize potential returns, we will employ a trailing stop-loss strategy. Once the price reaches $8.54, we will adjust the stop-loss to $8.34. If the price continues to rise, we will further adjust the stop-loss to maintain a protective buffer. The final target price will be $9, coinciding with the resistance level. This strategy balances risk and reward, capitalizing on the bullish trend while safeguarding against unexpected reversals. The portfolio will be 60% long Chainlink with an entry price of $8.27, a stop loss of $8.33, and a target price of $8.85, and 40% in cash. Based on the historical data and forecast, Cardano shows a slightly downward trend over the past 2 weeks, but the RSI consistently remains above 40, indicating a lack of strong selling pressure. The forecast for the next week predicts a range-bound movement around 0.165 to 0.168. The support price is consistently at 0.158, and the resistance is at 0.173. Considering these factors, I recommend a cautious long strategy with a focus on short-term gains. The RSI is currently around 47, which is near the midpoint, suggesting a balanced market. We will enter a long position at 0.165, placing a stop loss at 0.158 to protect against a potential downside breakout. The target price will be set at 0.173, aligning with the resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been fluctuating within the bands, indicating volatility. If the price touches the lower Bollinger Band, around 0.135, it signals an oversold condition, prompting a buy. Conversely, if the price touches the upper Bollinger Band, around 0.193, it suggests an overbought condition, signaling a potential sell. However, given the current trend and forecast, our primary strategy remains the initial long position at 0.165 with a stop loss at 0.158 and a target price at 0.173. This strategy balances risk and reward, capitalizing on short-term movements while mitigating potential losses. We will reevaluate the position after July 22, 2026, based on the actual price action and updated technical indicators. Based on the historical data and forecast, NEAR protocol shows a slight upward trend. The price has been fluctuating between a support of $1.87 and a resistance of $2.31. The RSI indicates that the asset is currently neither significantly overbought nor oversold, hovering around the 50 level. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering the forecast prices, which predict a gradual increase towards $2.1, I propose a long position strategy. My recommended strategy is to enter a long position at $1.97. Given the recent volatility and potential for price swings, I suggest a stop-loss order at $1.87, aligning with the established support level. For the target price, I'll aim for $2.09, based on the forecast data and the resistance level. This strategy combines technical indicators and forecast data to capitalize on the anticipated upward trend while mitigating potential losses with a well-defined stop-loss. This approach balances risk and reward for a high potential return. Based on the historical data and forecast, Virtual's protocol shows a generally upward trend with periods of volatility. The RSI fluctuating between 37.9 and 58.1 suggests that the asset is occasionally entering oversold or overbought territory. The Bollinger Bands indicate periods of increased volatility, with prices occasionally touching the upper or lower bands. Considering the support price of $0.524 and resistance price of $0.617, a combined strategy focusing on both RSI and Bollinger Bands will be implemented. The strategy will involve a long position when the RSI dips below 40, indicating an oversold condition, and the price is near the lower Bollinger Band. The entry price will be $0.589, coinciding with the forecast price and the lower Bollinger Band. A stop loss will be placed just below the support price at $0.523 to limit potential losses. The target price will be set at the resistance price of $0.617, aiming to capitalize on the upward trend. This strategy combines the momentum indication from RSI with the volatility assessment from Bollinger Bands, offering a balanced approach to maximize returns while managing risk. Based on the historical data and forecast, Kite demonstrates a slight upward trend with periods of consolidation. The RSI consistently hovers around oversold territory below 30, indicating potential buying opportunities. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible rebound. The support price remains steady at $0.122, while the resistance is significantly higher at $0.177, offering a substantial profit margin if the price breaks through. Given these factors, I recommend a long position strategy focused on capitalizing on potential upward momentum. My strategy involves entering a long position at $0.112 on July 16, 2026, coinciding with the forecast price and the lower Bollinger Band. The stop loss will be set at $0.11, just below the recent low and the lower Bollinger Band, to limit potential losses. The initial target price is $0.128, aligning with the center of the Bollinger Bands and a reasonable profit target given the current market conditions. If the price breaks through the $0.128 level, I will adjust the target price to $0.177, aiming to capture the full potential of the resistance level. This strategy combines RSI and Bollinger Bands to identify optimal entry and exit points, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, ApeCoin shows a slight upward trend with recent volatility. The RSI fluctuating between 51 and 68 suggests periods of both oversold and overbought conditions. The Bollinger Bands indicate that the price has been oscillating within a defined range, recently approaching the upper band. Given the forecast prices hovering around $0.15 and the support price at $0.147, I recommend a long position with a conservative approach. We will enter a long position at $0.151. The stop loss will be set at $0.148, just below the recent low and below the support price to limit potential losses. The initial target price will be $0.158, aiming for a modest profit while respecting the recent resistance level. To refine this strategy, we'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we'll consider entering a long position at the prevailing price, with a stop loss at the recent low and a target price at the nearest resistance. Conversely, if the RSI exceeds 80, signaling an overbought condition, we'll consider a short position at the current price, with a stop loss above the recent high and a target price at the nearest support. The most efficient portfolio will be a combination of these three strategies, with a slight bias towards long positions given the overall upward trend and the forecast prices. This balanced approach allows us to capitalize on both upward and downward movements while mitigating risk. Based on the historical data and forecast, JasmyCoin shows a slightly upward trend, bouncing around the support price of $0.00442. The RSI fluctuates between 40 and 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, suggesting a period of consolidation. The forecast for the next week predicts a gradual increase, with prices hovering around $0.0045 to $0.0046. Therefore, a moderately bullish strategy is recommended. We will implement a combined strategy incorporating RSI and Bollinger Bands. The entry price will be $0.00444 when the price touches the lower Bollinger Band. The stop loss will be set just below the support level at $0.0043 to mitigate potential losses. The target price will be $0.00463, aligning with the upper Bollinger Band and the forecast price. If the RSI dips below 30, indicating an oversold condition, we will enter a long position at $0.0044 with a stop loss at $0.00435 and a target price of $0.0046. This portfolio combines the strengths of both indicators, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Pudgy Penguins exhibits a downtrend with increased volatility. The RSI consistently hovers around the mid-range, indicating a lack of strong directional momentum. The Bollinger Bands have been widening, suggesting increased price fluctuations. The forecast for the next week projects a continuation of the downtrend, with prices fluctuating between $0.00593 and $0.00608. Considering the support price of $0.00616, I recommend a short selling strategy when the RSI reaches above 60. Specifically, enter a short position at $0.0063, set a stop loss at $0.0065, and target a profit at $0.0059. This strategy aims to capitalize on the anticipated downward movement while limiting potential losses. To refine this strategy, I will incorporate the Bollinger Bands. When the price touches the upper band, it signals a potential shorting opportunity. If the price closes below the lower band, it suggests a potential buying opportunity. Therefore, I will create a combined strategy. Enter a short position at $0.0063, set a stop loss at $0.0065, and target a profit at $0.0059 when the RSI is above 60. If the forecast price falls below $0.00593, adjust the target price to $0.0058 to secure profits and manage risk effectively. This combined approach leverages both RSI and Bollinger Bands to optimize the investment decision. Based on the historical data and forecast, Lido DAO exhibits a clear upward trend. The price has been consistently moving higher, supported by increasing RSI values and the Bollinger Bands expanding. The recent RSI values above 60 indicate strengthening momentum. The forecast predicts further price increases, reaching $0.386. Considering this, I recommend a long position strategy. We will initiate a buy order at $0.335. To mitigate potential risks, place a stop-loss order at $0.314, just below the recent support level. A reasonable target price is $0.374, aligning with the forecast and allowing for a substantial profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we'll consider adding to our position at $0.335. Conversely, if the price touches the upper Bollinger Band, suggesting an overbought condition, we'll take partial profits at $0.35. The core strategy remains a long position with an entry at $0.335, a stop-loss at $0.314, and a primary target at $0.374. This portfolio balances trend following with tactical adjustments based on RSI and Bollinger Bands, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ether.fi shows a fluctuating trend with a general upward bias. The price has been oscillating within a range bounded by a support price of $0.375 and a resistance price of $0.463. The RSI values have mostly remained between 50 and 67, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening and contracting, suggesting periods of increased and decreased volatility. Considering the forecast for the next week, with prices expected to hover around $0.412 to $0.435, I recommend a moderately bullish strategy. My strategy involves a combination of RSI and Bollinger Band signals. I will enter a long position at $0.412, coinciding with the first forecast price and near the lower Bollinger Band. The stop-loss will be set at $0.394, just below the recent support level and outside the lower Bollinger Band. The initial target price will be $0.435, aligning with the upper end of the forecast range and the upper Bollinger Band. If the price reaches this target, I will consider moving the stop-loss to break even to secure profits and potentially ride the momentum further. This strategy aims to capitalize on the anticipated upward movement while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Pump.fun demonstrates a fluctuating trend with a recent upward bias. The RSI consistently remains above the 50 level, indicating a moderately bullish momentum. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation followed by a potential breakout. Considering these factors, I propose a long position strategy with a focus on capitalizing on the anticipated upward movement. The entry price will be $0.00157, coinciding with the first day of the forecast period and a reasonable price point. A stop-loss will be placed at $0.00148, just below the recent support level and the lowest price in the historical data, to limit potential losses. The target price is set at $0.00173, aligning with the highest forecast price and a conservative profit target. To enhance the strategy's efficiency, I will incorporate a dynamic adjustment based on the Bollinger Bands. If the price approaches the upper band, I will consider taking partial profits to secure gains. Conversely, if the price touches the lower band, I will reevaluate the trend and potentially adjust the stop-loss. This adaptive approach, combined with the RSI and support/resistance levels, aims to maximize returns while mitigating risks. The overall portfolio will lean towards a long position with a moderate allocation, reflecting the anticipated upward trend and the need for flexibility in response to market dynamics. Based on the historical data and forecast, Ondo shows a mixed trend with recent upward momentum. The price has been fluctuating within a range, but the recent RSI reaching 63.3 suggests a potential overbought condition. The forecast indicates a continued upward trajectory, with prices potentially reaching $0.355. Considering the support price of $0.311 and resistance of $0.421, we should implement a strategy that capitalizes on the potential for a pullback before further upward movement. I recommend a cautious long position, anticipating a temporary dip before the overall trend resumes. Therefore, I suggest entering a long position at $0.333. Given the recent overbought signal and the proximity to the resistance level, I set a stop loss at $0.311, just below the support level, to limit potential losses. The initial target price will be $0.367, aligning with the recent high. If the price breaks through $0.367 and continues to show strength, a secondary target of $0.421 can be considered, approaching the resistance level. This strategy combines the upward forecast with risk management by utilizing the support and resistance levels and RSI signals.